Hey guys, what is up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla and let's go over the market. If you enjoyed, don't forget to hit that like button. This is not financial advice and I'm not a financial advisor. And of course, if you want to join my YouTube membership, I do have one, of course, for all people that are interested. The link is down below in the description of the video, where again, I just share my thoughts, post updates, technical analysis, options flow, etc. on Tesla, NVDA, non-Tesla, non-NVDA stocks. So definitely check that out. Again, link is below in the description for the YouTube membership. It's just $3 a month for the first tier, which is of course including all my Tesla updates. The second tier for $5 includes NVIDIA as well. $7 for the third tier includes, on top of that, non-Tesla, non-NVIDIA opportunities and stocks and things like that I share, that I see things worth sharing, of course. And on the weekend, I do chart requests with members over on Discord. But jumping into a Tesla, closing the day up an okay, we'll say 3%. Now, relative to the market, it did pretty well, but today is an interesting day. So there's a lot to go over, right? So let's talk about this and let's figure out what the hell's happening. So there's a lot to go over. First and foremost, let's get the obvious potential stuff out of the way. First and foremost, one candle does not make a trend. That is really, really important to understand before I get into what I'm about to say. One candle is not a trend. It's just one candle. However, with that being said, we do technically have a breakout, right? We do technically have a final breakout out of this very large pattern that the stock has been technically trading in since pretty much end of May, early June, right? 2.5 months almost. Pretty long time, right? Pretty long time. The stock has been trapped in this range for quite some time, constantly making lower highs, right? Lower highs, higher lows, right? More or less. Today, we finally broke that trend. We broke this recent high over here at about 338 this morning. And yeah, we closed just slightly above it. So technically speaking, yeah, this is a breakout. Technically, this is bullish. Absolutely. Obviously, there's caveats. Like I said, one candle doesn't make a trend. I'll give you what levels I personally don't want to see lost anymore, or else I would view this as potentially a very large, massive bull trap. We're not there yet, but obviously it's always good to be cautious of certain levels because, you know, things are not always perfect. Things can turn around. The market likes to trap people, especially nowadays. So always important to kind of understand both perspectives. But we did break out. We broke 338. We broke out of this pennant. We made a pretty nice, convincing higher high. We didn't do it like we did here with the bears, where we did technically break this low, but we didn't close below it. So not only did we break it, but we actually closed above it. So there's a lot of good signs setting up for bulls here. The only things that are concerning to me is the fact that we are obviously pretty extended from the exponential moving averages, even the 9 exponential moving average. So, you know, we are pretty extended. But overall, structurally, technically speaking, this is a breakout. This is bullish, and this should theoretically go higher. So let's go over that levels first from the bullish perspective. Where can we go that's higher? Like, what levels can we aim for? Well, there's obviously going to be shorter term levels and there'll be longer term levels. Shorter term levels, let's go to the 4-hour really quickly, is going to be, especially with the 4-hour SMI all the way up here, we'll talk about what that means soon, is going to be to this kind of fair value gap, right? If we get one more push higher, I think we'll get one more push up to closer to about 350, maybe low 350s, but I would say around 350, give or take a few dollars. We got pretty close to it this morning at 347, but I wouldn't be surprised to see a little bit higher, to be completely honest, on the shorter time frames, right? And then I think from here we'll stall out, and then I think from here we probably get a little bit of a consolidation, assuming this isn't like an aggressive bullish run, which I'll go over that as well. There's a lot to go over, like I said, but that's going to be what I'll be looking for short term. Short term, we have that target, and then second target to the upside is closer to 365. Those are the first two targets to the upside shorter term, right? The overall target, because this is technically a breakout, and assuming it doesn't fall apart, which I'll go over that level soon as well, there's a lot to go over. I really wouldn't be surprised if Tesla ultimately makes its way back up to somewhere around this range, somewhere around a very, very high 300s to potentially even the low 400s, right? Somewhere around this range at the very least really wouldn't shock me to retest these levels up here, right? That's kind of the main level I'll be looking for. Again, about $400 per share is kind of my overall main target for this potential pennant breakouts. But that's like, even that I would argue is short term. If you really want to, like, you know, if you're really going for like the full bullish mode, you would essentially argue that this is just a massive pull into this massive kind of bullish pennant / flag type looking pattern breakout. And technically speaking, this can actually send Tesla all the way back to retesting all-time highs. If you want to go, it's strictly off of the measured move off of this pennant breakout, which is pretty much right here, which is pretty much back to $480 per share, which is pretty much a retest of all-time highs. Technically speaking, that is a possibility. That is something, you know, that as long as we don't lose key levels, which I'll go over very soon, is now technically a topic of discussion, right? That is technically a target now for the stock. Let's see if this plays out or not, right? But again, you know, this is technically a breakout. The MACD is bullish. The EMA's, even though we're extended, still bullish, right? A lot of really good signs. Now, on the weekly, right? Weekly is definitely flirting with a nice looking breakout. The monthly as well, right? Remember how I said we had constant inside monthly candles in a row, but today we finally broke above one of the monthly highs, which was of course last month's, which we again couldn't do for the past several months, but we broke above it. So that's technically a good sign. Now, obviously you prefer to see monthly closures in this case to really confirm it. So in other words, closing pretty much this month above about 338, 340 is still the ideal scenario. But if we get that, even more bullish. But that's kind of the bullish scenario. That's the bullish targets. That's, upside. And yeah, the stock is technically bullish. But as always, nothing is perfect. There's always two sides to a coin, right? So let's talk about the other side. What are some concerning signs potentially? Or what are signs that the bulls do not want to see happen in order to avoid a potential massive reversal from these levels? Because again, if we do get a reversal from this level, if we lose these key levels I'm about to tell you, that is extremely bearish, because if you ever get a false breakout or false breakdown, more often than not, pretty often, you get a move to the opposite direction, and usually pretty damn quickly, right? So let's talk about that. What are some concerns? Well, the first concern, in my opinion, is, well, we have CPI tomorrow, PPI Thursday. Who knows how that's going to go? Nobody knows. But it is a concern. It is an unknown factor. It's technically something worth mentioning. So let's see how that goes. That is the first concern. I need to talk about one final thing before I go into the potential bearish or concerning situations. And that's going to be two more things. First and foremost, right, whenever you're getting a parabolic rally, you can see, for instance, we had that parabolic rally just on Friday, or I think it was, Thursday into Friday, we had the parabolic rally, and then we kind of consolidated back into the 9 EMA, kind of a bull flag, and then we rallied up. And now we're kind of doing the exact same thing right back into the 9 EMA. So let's see. This is something just worth mentioning on the 1 hour time frame. But the final thing I forgot to mention on the daily before I go into the more concerning signs is the candle that we have setting up right here is very similar to the candle we had right here. This one right here and this one right here. Very, very similar. Why are they similar? Well, first and foremost, they're pretty much both green candles, both have a half body, half wick, but even more so, they're both breakout candles. What did this candle do? Well, we had the massive rejections constantly, pretty much right around this sort of 290 region. Remember back then we had a nice breakouts, and then it kind of had decent volume, okay volume here as well. I wouldn't say the volume is amazing, to be honest, but it's not atrocious. It's okay volume. And even back here, this candle was a little bit better, to be honest, but still, nothing completely crazy. But they're both breakout candles. They both broke out above a level that we couldn't break out before, and they both have essentially the same kind of body to wick ratio, if that makes sense. The reason I bring that up is because if we follow this pattern, well, what did this candle do the day after, or the stock? Well, it gapped up and it essentially just flew from there right into the 350s-ish region. So let's see if that happens. If this happens here, we can easily see 365, maybe even 370, maybe by the end of this week, right? But that's, of course, if we get that gap and go type scenario. So I just figured, there's a bit of a similarity between that. Figured it was worth sharing. Now let's go over to the concerning signs. What do the bulls not want to see happen? What levels do they not want to see lost? First and foremost, the first level I'll be looking for that I do not want to see lost from a bullish perspective is, well, the region that was resisting us for quite some time, 335 up to about 338. For instance, on these candles here, you can see anytime we went to 335 to as high as this 338-ish region, we constantly got rejected, right? This was a bit of an anomaly, but essentially that's the first region. If we lose 335 to 338, it's a little bit of a warning sign. I wouldn't say it's a huge warning sign, but it's a warning sign. However, to me, the level that I really don't want him to lose, the level if we lose and especially start closing a daily candle below for, again, whatever reason, 330, about, of course, give or take about a couple dollars, of course, but about 330, give or take $2, let's say. That is the level I do not want to lose. That is the level where if bulls lose that level, if we lose and close below pretty much right around this region right here, that'll be very, very bearish for me. Why? Well, because number one, we're losing keys levels that were a resistance that should be turned into support if we come back to retest that into higher movements, right? Because we have a breakout, back test, move higher. Typical stuff usually, right? You don't always get the back test, but if you do, well, you want to make sure you hold the level that was a resistance. Again, it could be as little as a 335 to 338 pullback. Below that, of course, we can get a deeper one to 330. But that needs to hold. In my opinion, that level absolutely needs to hold. And if it does, the bulls are in full control. If it doesn't, the bulls completely lose control, and I think the stock will turn around back to bear mode very fast, very aggressively, very quickly. So just watch for those two main key level points, if you will, right? Above them, bullish and probably actually potentially even very bullish. I actually haven't sold my position at all. I actually entered on Friday's close at 330 for some level of transparency, I guess. Only 25% of my total position. So I will most likely be adding if we get this back test, because at that point the stop loss is pretty much right there. But I haven't sold any. Again, it's only 25%. That's the only reason I haven't sold. I'd rather have more exposure than not. So I'm ready to add more exposure if I get the opportunity to do so. But again, 330, not the level I'd want to see lost. But above that is looking pretty good. On top of 330 being lost, but also argue the fact that, well, we're closing back within this pennant. And back within this pennant, a closure under that is, well, that's also going to look like a false breakout. There's just a lot of red flags, pretty big ones as well, if we start going below and closing daily candles below 330. So in my opinion, that's probably the most important level, give or take, of course, a few dollars. Below that, I'd watch out. Above that, however, hey, the bulls are looking pretty solid. I see no reason to be fully, scared or anything like that. I think the bulls are in full control here. Now, again, the only potential problem is the fact that we're very extended from the exponential moving averages, including the 9 exponential moving average, which is a pretty quick one. But, we can get a nice little pop up one more time to 350, kind of like what Apple did. You can see here, nice massive move up, and then it continued. And now it's starting to get that bit of consolidation, maybe even a small pullback to the exponential moving averages into what I believe Apple will just continue going higher after that, at least as of right now. Right, so kind of the same idea on Tesla stock, right? If we get that one higher pop quickly, maybe as early as tomorrow to 350, and then I think from there we'll reject, and then we'll create maybe like a bull flag back into the emails or something of the sort, into most likely move higher. But again, this all relies on, well, 330 holding. That's pretty much the majority of what I wanted to mention. That's probably everything else. Now the final, sometimes, I like to trade momentum. I have two trading styles. I have one that trades momentum with just shares, sometimes options like calls, but almost always shares. Or I like to sell puts or cover calls, I guess, but more specifically puts on stocks I like on weakness. Obviously, in this case, we're seeming to enter momentum territory. One thing sometimes I like to confirm momentum even further is something called super trend with these settings to 22 and 3. This one is pretty interesting, right? Kind of same idea as what it was back here, right? So you can see we rejected right at the top of it. That is something I would really like to see it break. But what did we do back here when we were still consolidating all the way here? Remember this? We ended up getting back above it. We ended up breaking it. You can see it turned back to green, and then we bull flagged into the EMAs, into the super trend, and then we headed higher. I hate the name super trend. It just sounds so cringy. I'm using the super trend indicator. It just sounds cringe to say, but whatever. And that's kind of what happened when it broke down below this thing. We remember with Trump and Elon had the massive feud, whatever. And then we've been kind of consolidating since, right? Rejecting pretty much at it almost every single time. And now we're back at it once again. Now, I think if there's a time to break it, this is that time to break it. But just as another final kind of checklist to add to bullish potential here, I would love to see this thing turn back to green. I would say of my main indicators that I like to use, which is just strictly candles and price action, followed by the EMAs, the MACD, I think the super trend, to me personally, is probably the lowest on my list of importance, but it's kind of that cherry on the cake. If everything else is lining up and the super trend is green, that's looking pretty good to me, right? That's looking pretty solid. So let's see. But just something I figured that's worth sharing. But all in all, that's kind of what I see right now. All in all, 330 probably the most important level to hold. If we lose that, I'd watch out. But other than that, the bulls have full control. So let's see what it develops into. One candle doesn't make a trend. We have CPI tomorrow. Let's see if we hold the 330s. That's all that matters to me right now. As long as we hold 330s, I think 2 thumbs up, and I think it's looking ready to rockets. However, below that, not looking good. For the most of the day, yeah, the bulls were dominating, right? Definitely more call flows overall than bearish flow throughout the entire day. But towards the end of the day, you can see as the market was pretty much on the verge of closing in the last 10 minutes, we did get some bearish flow into tomorrow. Could be hedges into CPI tomorrow. We don't know for sure. Maybe someone's expecting a bearish reaction. Who knows? But I did see some bearish flow into the end of the day. Make of that what you will. But all in all, thanks for watching. See you tomorrow. Peace.